Hi there. A very common question being asked is whether or not you can get tax relief on mortgage interest paid on rental property income. A few years ago, there was a restriction brought in on how much tax relief you can get on mortgage interest paid against rental income. And here's how it works. In this scenario, we've got Joe Bloggs, who earns £30,000 from his employment income. He has tax deducted at source of £3,486, although he has a rental property. So we just go through to the summary here. He's received £10,000 of rental income. He's got £3,000 of rental income expenses, and he's paid £4,500 in mortgage interest. So his actual net property income after deducting the mortgage interest is only £2,500. Although, for the purpose of calculating his tax, we first assess his taxable rental income as £7,000. So going back up to here, he's got a total taxable income of £37,000. Deduct his personal allowance of £12,570. He's got income tax to pay on £24,430, which comes to £4,886. But if we remember, he's paid £4,500 of mortgage interest, so he gets tax relief on that mortgage interest at 20%, being £900. So it means his tax liability, therefore, for the year is £3,986. But because he's had £3,486 tax deducted at source, he's only got the difference of £500 to pay. Now we just take a step back a moment, bring our calculator out. Joe had rental income of £7,000, and if we deduct the £4,500 loan interest, meaning his net rental profits was £2,500, and at 20% that comes to £500. So in this case, Joe is completely unaffected by the restriction on the loan interest. Where it will affect him is as follows. If we picture this slightly differently, and Joe, instead of earning £30,000 from his employment income, is earning £45,000, he still is in theory a basic rate taxpayer, because if you add the £2,500 of rental profits to his £45,000 salary, total income should really only be £47,500, which is below the high rate tax threshold. Although the issue that Joe has is because of the way the finance costs are calculated in the tax return, it means that he becomes a high rate taxpayer without actually earning a higher rate tax income. Joe receives £45,000 of employment income plus the £7,000 of rental income before deducting the £4,500 of mortgage interest. Means his total income is £52,000. As you can see, he's paying some high rate tax here, but he's only getting 20% tax relief on his finance costs. The tax on which Joe has to pay on his employment income has all been deducted at source, meaning this £846 is only on his rental income. So if we just pull out the calculator again, if Joe is a basic rate taxpayer, he should only be paying 20% tax on his £2,500 rental income. Because of the way the loan interest restriction works on his tax return, he's actually paying an extra £346 of tax, which he wouldn't pay if this loan interest restriction wouldn't apply. If Joe was a high rate taxpayer before even taking his rental income into consideration, this is how much tax he'll be paying on his rental income. So we just pull up our calculator. So he's got the £10,000 of rental income minus the £3,000 of allowable expenses. That gives him £7,000 of taxable rental income. Times that at 40%, it will be £2,800 of tax to pay. We just pull up another calculator. As we know, he's got his £4,500 of mortgage interest, which will get basic tax relief at 20% on, which will give him £900 of tax relief. So we just pull that £900 back into here, minus £900, meaning his tax to pay on his rental income will be £1,900. If this finance cost restriction would not apply, this is how Joe's tax liability on the rental income would look. So we'd have £10,000 of rental income. He'll have £3,000 of allowable expenses and £4,500 of mortgage interest. Times that 40%, be £1,000 of tax to pay. So assuming that in this scenario Joe is a high rate taxpayer, and as a result of the restriction on mortgage interest, Joe is paying an extra £900 of tax. Thanks for watching, and please don't forget to subscribe.